18th time we're hosting this conference. We are hosting it in partnership with Citi, in cooperation with the New York Stock Exchange and NASDAQ, and also with major global investment banks. This forum always takes place in March. It is at a period right after the release of the earnings of the publicly listed companies, and thus it is of particular significance to the management of these companies to be here and communicate with their shareholders and prospective investors. This year, the conference takes place at a very good time for shipping. Shipping as an industry has been going through a very positive cycle, and all expectations are that this will continue for the next few years. Despite that, we have a number of important challenges, and mainly on the regulatory area, on the environmental compliance, on technology, on crewing, and geopolitics. So we have the opportunity with top-level speakers today, it's a who's who of the industry here, to debate all these important topics and exchange views. So overall, we are particularly happy, again, with the consistent quality and turnout of this event. Our keynote speaker today at luncheon is Alexander Saverys, who is the CEO of Euronav and CMB, Compagnie Maritime Belge. We are particularly happy to have Alexander with us. Alexander, besides being a very important presence in the global shipping industry, he's also a visionary. And he's a visionary who turns his vision into reality. So we have a lot of respect for him, and we're delighted that he's going to be here with us today to share with us not only his vision, but how he's implementing it and turning it into reality. Shipping today is facing a number of challenges, but it's a great time for shipping. Most segments, maybe not the containers, but most segments are facing very positive fundamentals. Shipping, I think, has found its rightful place as a vital link in the global supply chain and in global commerce. And investors, I think, are now focusing more and more on shipping exactly in its role as a link in the global supply chain. Overall, in most segments, the supply of new ships is limited, and geopolitics are adding to the equation, which means that most markets are quite robust in terms of rates. So it's a great time for shipping. We see companies being quite profitable, cash-rich, very strong balance sheets, having the opportunity to renew their fleets. At the same time, shipping is facing a number of important challenges. All the regulations, are they going to be global or are they going to be regional? What are going to be the green fuels of the future? That is a very important element for ship owners who need to renew their fleets. How is technology impacting fleet performance and fleet optimization? And finally, crewing. The supply of crews, the welfare of seafarers is a major concern for all shipping companies. So all these problems, all these challenges are there. But again, shipping is an industry that is very used to challenges. Volatility is part of the everyday happening of shipping. So I think it's good to say that we are in a very positive stage for shipping today and for the next few years. We want to maintain what we do. If something works, don't try to fix it. So far, we are present in major global centers for the shipping industry. We're very happy with the penetration we have in the shipping community, the investment community, and the industry. So we just plan to continue doing what we do. The one area where we are intensifying our presence is online, as the online presence today has become a very big part of our everyday life. So our plans is to continue hosting our events, prime events, in Europe, the Americas, and Asia.
run an analyst panel. Most of it will be what are the issues surrounding the stock prices of the bulkers, LNG carriers, containers, and the tankers. What our favorite picks are and why we like them. 2023 was a fairly strong year, especially the first half of the tankers, but we're expecting a very strong year for a number of reasons. Supply is a very underrated factor when dealing with all the players, except possibly the containers that are getting the benefit of the crisis in the Mideast for the near term. But if you look at the bulkers and the tankers, we'd expect strong years from them based on the fact that the vessel supply is very tight. I think the Middle East situation is pretty serious. The Russia-Ukraine, I mean, it's a crisis, and obviously the grain trade has been affected pretty significantly. But when you're looking at the Red Sea, I mean, all aspects of shipping are disrupted by it, and you have no choice to avoid the Suez Canal and the Red Sea. Your your ton-mile demand increases significantly. Higher ton miles, tighter supply, higher rates.
The capital markets so far this year are open, particularly on the debt capital market side. So we're off to what may be a record pace. We're going to end up with more than half a trillion dollars of investment grade issuance already in the first quarter of this year. And companies should take advantage of this. This tightness of where we are in terms of credit spreads, corporate spreads versus government spreads, is back to the best levels of where they were in the fourth quarter. Companies should take advantage of the market now. There'll be a competition for capital, I think, at some point this year. The shipping sector was already in great shape, combination of all the factors you've heard. Small order book, good demand in a lot of segments, great import numbers into some of the emerging markets, India, China, et cetera. So we already had a healthy backdrop for the shipping markets before we threw in more disruption. And so the disruptions of the Middle East have been enormous. The impact is much greater than the percentage of the fleets that travel through those areas. If you think about not only the additional time, but the additional refueling and the logistics involved, this has been a major disruption. I'm obviously looking forward to the tanker panel. I'm looking forward to the analyst panel. You know, so many things have worked in shipping. Containers started to work again. Dry bulk is working great. Tankers are working great. LNG is working okay. I'm interested to see where the opportunities are going forward.
I want to talk a little bit about the challenges facing the dry bulk industry in terms of decarbonisation, the potential solutions that you can have, and also I think to me that the two key ingredients to that are going to be around the fuels, the future fuels, the way in which you can change the model for buying future fuels, fuel procurement. That's the first piece around fuels. Second piece is around the charterers and the work we see the charterers doing, the big mining companies, how they're incentivizing companies to decarbonise, and how companies and charterers need to work together to actually sort of support that energy transition in dry bulk industry. So obviously Lloyd's Register works across all the sectors. The panel I'm moderating today is on dry bulk, so I'll answer just about dry bulk. I think 2023 saw a pretty strong dry bulk market, but really driven by one commodity. You know, the 150 million tonnes of incremental trade we saw in 2023, 120 million odd was steam coal going to China. Really dominant. Start of 2024 has seen a far broader base of demand growth, and I think that's pretty positive. And I think, we actually see some downside risks around coal. Not just the energy transition, but also pretty high port inventory, so on and so forth. But a far, far broader base of demand. Order book minimal supply growth pretty minimal. I mean, a little bit in the Panamax sort of Kamsarmax sector, but not very much in terms of supply side growth. So I think you're going to see, you've got some pretty positive dynamics there. Ongoing trade growth, limited supply. I think it should be another reasonably good year for the dry bulk industry. I enjoyed the MSC one just now, talking about sort of challenges of decarbonising containers and crews. I think it's always interesting to see what CMB have to say too. I think they're really putting their money where their mouth is in terms of decarbonisation. Obviously, they're trying to tackle the whole value chain from producing green hydrogen in Namibia all the way through to burning it on their ships. So I think that's certainly going to be an interesting panel or an interesting interview to read as well.
I'll be on the gas panel, really talking about the LPG markets, ethane, ethylene, the different commodities we carry at Navigator Gas, as well as kind of the global impacts of the Panama Canal, the Red Sea disruptions, all of those items. 2023 was certainly a year of disruption, right? You had the Panama Canal disruptions, you had the Houthi rebels and the Red Sea disruptions, you had commodity price fluctuations. So it was a very wild and volatile year, but it's certainly a very strong year, right? When you look across our markets in LPG, even in tankers and dry bulk, a lot of strong rates and a lot of strong asset value movements. So we expect that to continue into 2024, right? I think there's still going to be disruptions that are going to persist, but when you're looking at the supply-demand fundamentals, the order books are pretty low, demand seems robust, so it should be another great year for the shipping markets. The other two panels that I'll certainly be at, other than some of the other sector panels, will be around the capital markets and what are the available uses or sources of capital from the different capital providers, but also kind of future fuels, right? We are very big on ammonia as a future fuel, but also seeing what other kind of people and ship owners are saying around future fuels.
Basic point of my speech, the alternative finance part of ship finance is growing because there's demand for that, and we offer the flexibility and the speed that big banks cannot offer. We blend private equity money with bank money and other institutional funds to offer a one-shop solution to clients. 2023 was a year of transition. We had good markets in some areas. We had too high prices on some vessels that were not really supported by charter income. In 2024, this looks better matched. We still have high prices, but we have better income to support it. And we have still a very good market. I would expect during the year that we see corrections in some areas, but more towards the end of the year. I usually like the ones where people talk about markets that are in the middle of the industry, so you get it from the horse's mouth.
I think for us it has been a landmark year as we ventured into the transition with LNG. So I think the main points would be explain a bit how we see the LNG market going forward, how we see the transition into, let's say, into a more green shipping, and where we see our position within that, and how Capital Product Partners will transition into being let's say, pure gas player in the market. I think it has definitely been a very interesting year in shipping. I think we have had the year ended probably in a totally different note than what we were expecting at the start of the year. We are seeing, I think the increase in asset prices has, let's say, slowed down a bit. So we are seeing kind of stabilization in prices, and we expect to continue to see that over 2024. Although I think we are very far away from a correction in price. We are still far away from a correction in prices. I think volatility will be high in 24 as it was in 23. The geopolitical factors play a key role in that, and we expect on our side, on the LNG market, I think the fundamentals for the shorter market are a bit, let's say, on the long side for shipping. So we expect a softer market in 24. But going forward in 25 and 26, when we see more new projects coming online, we expect the market to tighten significantly. The last LNG vessel that passed through Schües was early January. So that we believe that will make a big difference going forward, and the demand for ships will be higher. The Russian-Ukraine situation obviously going on. I think now there has been a normalization across trade for that situation, and we think probably going forward sanctions will probably become a bit more stricter. So trading Russian volumes will become a bit more difficult. And then we have, I think the main risk is, the risk that has been highlighted, the dark fleet risk effectively, where we see a lot of vessels not complying with safety regulations, and that will impose a significant risk for the whole industry itself.
I'll be discussing the Baltic investor indices and the next level of the information that the Baltic is providing. So beyond the day-to-day route assessments, we're looking more towards the management of vessels, the commercial returns and the opportunities for scrapping, new building, replacements, and fleet operations and benchmarking. My biggest concern is that 2023 is only the beginning of the volatility between Panama, Suez, 2 active conflicts and possibly more. I think volatility is going to continue to go up, and we need to be protected in terms of forward returns and looking at ways to manage the financial risk as much as the operational risk. I love coming to this conference just to hear all the different insights. The tanker panel was fantastic. I'm looking forward to the whole afternoon.
In NJORD, we are all about accelerating decarbonization in shipping through technology. And I definitely saw that 2023 ended as a year where there was a lot of conversation around what to do next and how to decarbonize through technology. 2024 already now has proven to be a year where there's much more action among ship owners and charters, who are now starting to seriously look at, okay, how can we optimize our fleets, how can we stay ahead of regulations, and how can we, in a commercial, sensible way, start driving down emissions. The core from the panel that I was part of today, I think it was imminent that there is much more that can be done in the industry when it comes to decarbonization. We talked a lot about the green fuels of tomorrow. Which are the green fuels, what to bet on, what to invest in? Is the infrastructure going to be there? Is it going to be a good business case to venture out into a specific type of fuel? Whereas the conclusion, at least in my opinion, amongst the panelists was that regardless of where the industry will move in terms of the new green fuels, there's a lot of things that can be done here and now in terms of decarbonization, the fleets out in the water and also the upcoming new buildings. And that is to look for energy efficiencies and what are the different options out there and start deploying those. I'm looking very much forward to participate in the different market updates from the different segments. I think getting that fresh insights into how the markets are developing, whether new business is being made in terms of new buildings, and to see what are the interest areas and the focus areas of the different ship owners who are here. That's something I particularly like to attend. Yes.
I think I'm anticipating a lot of good debates. We live in a very moving world, changing world. We have the energy transition, of course, but also on the geopolitical side, there's a lot happening. So I'm sure we will interact on that. Well, 2023 for me is a year where the shipping world has basically come to a stop. We have stopped thinking about the future because we were earning good money, but also because the uncertainty has increased. Whereas in 2021, 2022, you could feel a vibe towards decarbonization, towards reinventing our business. You feel that last year this has really come to a stop. Understandably so, because it's nice to make money for once after the crisis that we've had. But I do think that 24 and 25 will need to reactivate the changes again. Otherwise, we'll be too late to comply with regulations. If you're in shipping, these things are part of your daily life. Unfortunately, it's 2 wars now, but geopolitics always affect our business. What we think about it is that you need to adapt, you need to change, you need to make sure that you can survive in this very strange world, and probably for longer than we think.
We're discussing the major issues of shipping, like we usually do, the decarbonization path and the upcoming regulation, and how that can be put into clauses by BIMCO so that the shipping community can live with that. It will be extremely exciting 2024 because now we are starting to phrase the regulation around the decarbonization. The pathway has been given in 2023 with the updated strategy. It has been, generally speaking, a very clear opinion of IMO that shipping has to decarbonize, so we will follow suit. I think the shipping industry is able to do that because we have the technological means. We don't know exactly which path it will be, but there are different alternatives on the table, so I'm optimistic.
2023 was a very strong year for dry cargo, and so far we started a lot better. So we are looking very positively for 2024 as well. I'm looking forward to see the tanker panel later on.
We talked about the status of the finance industry in relation to shipping. That has evolved over the past few years for a number of reasons, mostly related to the exodus of banks from financing asset-based industries. And that's what created a tremendous opportunity for us, and we decided to move into leasing, because we believe leasing is going to become a mainstream financing solution for the majority of the ship owners. Of course, we are symbiotic to banks. We work with banks, and we are acting as a conduit through which they can approach clients that otherwise they would not be able to. So it's a growth industry for ourselves, for leasing as a leasing business, but also for banks. And it's a growth industry because the shipping sector is going through the massive transformation as we're going through the energy transition. So it's not just the existing requirements of the fleet in terms of financing, the existing fleet, which has a value of about $1 trillion, but it's also the opportunity that's related to the new era, which is related to how the fleet is going to reduce its environmental impact and how the fleet is going to adjust to carry potentially new cargoes. So I think it's a very interesting era. For ourselves, we see leasing and our business, of course, growing significantly because those opportunities are very large. And we always make the comparison between the shipping industry and the aviation industry. The aviation industry is funded to the tune of more than 50%, 55%, through leasing companies. And in shipping, that same percentage is only 10 or 15. We expect the same trajectory that the aviation industry went through to occur also in the shipping industry, and therefore we think the future is bright for the leasing business. Well, safety is a key issue for shipping, not in terms of the assets, mostly in terms of the human casualties that potentially may have a devastating effect on the companies and on the families of the people that are involved. So that is a very explosive situation. We don't think that shipping, which is an industry that brings people together, should be affected by geopolitical events, because it's actually the industry itself that allows everyone to flourish financially and socially, as long as it's allowed to properly function and help the world trade grow. And that's what we're here to do, help the shipping industry go through a transition and help the world trade grow to the benefit of emerging markets, developed markets alike. We think we have good opportunities ahead of us. In terms of shipping, all markets seem to be going through a flourishing period. Rates have gone significantly higher compared to 2 or 3 or 4 years ago. And this was in fact helped to a certain extent by the instability. So there is a sort of inverse correlation between stability and shipping freights. And what we've seen is that shipping today offers good returns to the investors. And it does this because it offers an essential service. At the end of the day, that's what people are paying for.
We have experienced relatively low part of second last year. But we have seen that the market has improved during the first quarter, and we expect that the improvement will continue because we have also substantial demand. It seems that we have substantial demand for trading commodities, and also we have geopolitical tensions like the war in Ukraine, the diversions due to the closure of due to the let's say hostilities in the Red Sea. All these have played a role in increasing the ton miles and increasing also the charter rates. We don't like wars generally. We'd like to have peace, but it's obligatory that when there is a war, you need to divert. You cannot pass through or where hostilities. The important thing this year is that global economies move out of the, let's say, the increased interest environment, which we all expect that this will happen. And by doing that, the global trade will increase. So this is a potentially a good sign for trading commodities worldwide.
Frontline has been through a transaction together with Euronav. We've done what's regarded one of the largest asset transactions in the market, acquiring 24 modern VLCCs from Euronav. The key point now is that we've managed to finance this transaction, coming out of it with all these ships on the water, and kind of looking forward to take benefit of the markets to come. 2023 has been a very volatile year, and particularly so politically. One thing is Russia's invasion of Ukraine, but then increased unrest and the atrocities happening in Israel, the war between Israel and Hamas, and now kind of lastly as we come in, the situation in the Red Sea and the Houthis attacking ships. So I think kind of we are in a world that's becoming increasingly complicated for ship owners to maneuver in. And it's also affecting trade lanes to a large extent. So I think kind of this is a recurring theme for our industry as we move forward.
I am leading the capital markets panel on corporate strategy and optimizing corporate strategy and raising capital. I'm the lawyer. We structure the deals. We're looking to see more S&P transactions. We're looking to see more capital raising in the public markets, and generally just more activity overall, given the background of uncertainty with the macro issues that are going on in the world right now. The war has had a positive impact on shipping. While it's terrible for people and the humanity of it, and hopefully there's a swift resolution, given the disruptions and uncertainty, generally overall, positively favors the shipping market.